In this video, we are going to use the Fibonacci retracement tools to see how best we can mark out points of interest, and as we do so, how we can enter trades on them. Now, looking at this chart, this VIX chart, VIX 10 on the 4-hour time frame, we're identifying an uptrend in this area. Good. Because price has been breaking structures, going higher each time, right? Now, as it continues to break structure, going higher, then price failed to break this last high. However, a low was created here, of which we see where price break and close below that last low. Now that price has closed below that last low that we identify here, it is referred to as a change of character or a change in direction for the mere fact that price has broken close below the last low. It is indicating changing. Now, how do we use the Fibonacci retracement tool to identify our point of interest, thus using it as an area where we can open a position, a trade position? When we take our Fibonacci retracement tool and pull it from the last high that was created to the last low that was created here before the pullback starts, or where the pullback starts, then we identify our point of interest, which would be between the 50% of the Fibonacci retracement tool level and the 61.8. Now, let us call that our golden zone. And why it is called a golden zone? Because every time that price hits the golden zone, then we see a continuation in its trend. As we go on, we will identify more point of interests where our golden zone is formed. All right, look at this now. Now that we've identified this one, we can see that from the last low that was created where the retracement started, we have a break of structure from price hit our golden zone, it pushed further down, breaking structure to the lower side and closing below. Now that price has closed below and starts a retracement, then we want to see if price is going to pull back to our golden zone again. There is where we are going to use our Fibonacci retracement tool to pull from the lower high that was created to the lower low, the new lower low. And as that is done, we can see that price definitely pull back into our golden zone again. And that would be our new point of interest where we would want to enter another position to push price further down. Now, as price move away from our point of interest or our golden zone, we have another break of structure right here again. Price break structure and close below once more. And as price close below once more, once again, we pull our Fibonacci retracement tool on price action here from the lower high that was left to the new low that was created. And as we can see here, once more, price pulled back into our point of interest, which now forms a new golden zone. Or should I say the other way around? Price pulled back into our golden zone, which is our new point of interest. Now, as price has done that, price move away from that golden zone again to the downside, breaking the structure that is below. As price breaks structure and closes below, we start to have retracement. However, there is something that is important to note in this price action. Here was our last high. This is our last low. And between our high and low, we identify our golden zone. However, as price pushes out of that golden zone, we realize that there are internal structures that are formed before we have the break of structure of our last major low. In that internal structure, price still respects the golden zone. Even though price break above the golden zone, it closes within the area of the golden zone on our Fibonacci retracement level again, which would have given an opportunity to add another position to the previous one that we had. Now that price has done that, it creates low in between where we can pull our Fibonacci retracement tool from to the last low that was created that now breaks that structure. There is where we would find our new point of interest within this golden zone. Now, with that in mind, we want to move on from there to see how best we can look for more trade opportunities. Now that price has come back to our 0% here, there's a point to note. Price did not break and close below this level until it gets here, which means if we are to pull our Fibonacci tool from this high to this low that was created by means of wick, then this would have been another entry point to the low side. Get that? Yes. While this trend or this impulse break and close below this here consolidation and push back into our golden zone gives us another entry to go short again. This is where things get interesting. Now that it has created this low as price push away from our point of interest within our golden zone, what's interesting is it did pull back to our golden zone on our Fibonacci tool. Again, Fibonacci retracement tool. Right? There we go. That's our golden zone there again. And as price pull back into that level, what do we see? Price push away from there down to the lower side. This time it did not break the last low. Therefore, we want to start to look for a change again. And where did our change came? Right in this area where price break and close above. So here we call it again a change of character or change in trend. Good. What's interesting about this is that as price break and close above, creating a new high from this low, we pull our Fibonacci retracement tool from the last low to the new high that was created. And what do we see? New golden zone created. Or price uses the old golden zone that was there. There we go. And as we see, price come and tap right back into that golden zone and pushes higher. And then a new trend that began right there. Now, as we've identified these golden zones or point of interest within our golden zones, how can we use these as entry criteria into the 15-minute time frame and look for patterns within these new point of interest at our golden zone levels? Good. Now, for example, the first one here. As I look, as price come into this area, automatically I look for chart patterns. Now, as price hit the 61.8 level, which would be right here, it did it twice and it came back and did it here again. What I have seen is patterns. In this case, I am looking at the double top, or what we call M pattern, right? Double top. Good. And how do we trade double top? We want to wait for price to break and close below the neckline, give us a retest before we enter our trades. However, in this case, we did not have that close below with momentum for that pullback to go lower. However, in this second double top, there is where we get that close below with that retest. Now that we have gotten that retest, that is more than enough reason to enter our sell trade at the close of the candle, that at the retest mark, and our stop loss would be at the high, and our target would be the low that price had retraced from. We can identify in the second golden zone that we have right here, it is totally different. What makes this one different is because looking for confirmation, we would identify that price is creating higher highs going up. However, as it creates higher highs, we are seeing equal lows in this level. What this has created, in my opinion, or in most traders' opinion, is what is called an inverse descending triangle. Using this, we are looking for confirmations, and this would be the confirmation to go short because we are breaking below the equal lows, right? And again, our target would be the low that price is retracing from, with the high, with the stop loss above that high. We're seeing another double top right here. Good. Now, as price form that double top and break below the neckline here again, it gives us confirmation that price wants to go lower, and our entry would be at the retest of that level. And our target again, the last low that price retraced from. Now, if we were to look at this one here for an entry, as price go back into our golden zone, as we mentioned before, that as price keep pushing down to our last low, it created internal structure. And within this internal structure, hitting our previous golden zone, creating this new golden zone here, pulling the fib from this high to this low, we are seeing clear head and shoulders on this one right here. So as price break and close below here, see we have a retest of the right shoulder. And as we get the retest of the right shoulder, price did create what seemed to be M pattern again, with a retest of the neckline and then push below. So two patterns in one gives us more than enough confirmation to enter our trade upon the retest, targeting that low with our stop loss above our highs right here, or above the right shoulder. That's where I would put my stop loss. Okay, so as price did that and create new lows, we have new point of interest within the golden zone. So I'm just using this 15-minute time frame to show how patterns, chart patterns within our points of interest gives confirmation to enter trades on higher time frame levels. Right? Now, as price come to our golden zone, here again, our point of interest, we can see that price gave us pattern. What pattern did we get? We get a double top again. One more double top right here. That's right here. Clean and clear. That's a double top. And with that double top, we've got the confirmation with the break and close below the neckline. And there is where we take our trade right there, with our stops at the highs, and we target the last low right there. In this structure, in this price pattern that we see, this can be identified as an M pattern as well, or a wedge. right? As we've seen, price pushes higher and keep creating lows, but what in this case, price has been converging, right? It has not created immense highs in this area. And just the same with the lows here, this is what it looks like. So we wait for price to break below the last low that was created there, and that is another entry that would take us down to the low that's created there, right? With that in mind, we look at this as an impulse that gives us another point of interest where we can look for trade opportunities to go short again. Now that we have done that, or identify our point of interest within the golden zone, Fibonacci retracement golden zone, we can see that this is a M pattern again, right here, M, with a break below the neckline. Now, if you don't want to look at this as an M pattern, we can identify it as a descending triangle. So now we have the correct descending triangle more than other than the inverse descending triangle. And as we can see, that price breaks below, that in itself is an entry for us to go short. Or we could wait on the retracement, which would be right here, to go short. And we would now target the last low. As you can see, price did not hit the last low in this trade. However, as a trader monitoring one's trade, putting our trade at break even once price has broken below the 50% level of our trade, then this would secure our trade on this. So there we go. How we use higher time frames to map our points of interest, and how we use our lower time frame to spot trade entries or confirmation to go into these trades. All right, so there is where I would leave you for now. Please remember to drop your comments in our comment section as to how you have benefited or what are your views on this video here. So this is what it looks like on the 5-minute time, the 54-hour time frame. All right, all the trades that we could have taken using 4-hour time frame markups and 15-minute time frame entry points.